All right, some good plays today. I just wanted to do a quick video lesson. Right now, I'm in the middle of planning this webinar. This is tonight at 7 p.m. Eastern, so roughly 7 hours from when I am making this video, and we're still fine-tuning it. This is going to be me and Tim Grittani. Really excited to just go over the best lessons from his path from just a few $1,000s to now 3 million in a little over 4 years. Go to timothysykes.com/celebrate. Here is the link. If you have not registered already, it is a 100% free webinar, but I want to show you what's possible. Obviously, not everyone's going to be a millionaire, but it is possible, and it takes a whole lot of work, as you'll see. First, let me just apologize. I have so many students to congratulate today. I don't have time to go through all the tweets. Here's one that I just picked out. Max nailed the morning spike in LEDS. He made 850 bucks. And, you know, this is a solid trade. Buying it in the 7, selling it in the 8, just 1,000 shares. You can see his executions here. Pretty freaking awesome. And that is a good trade. LEDS was the biggest morning spiker, and you know, he didn't catch it in the 4s or the 5s or even the 6s, but he bought the breakout right here, and he took this part of the move. So today's video lesson, I want to talk about morning spikes. I tweeted this. Where was it? Too many tweets. Yeah. So MRNS, EYES, forward, VSR, and TRCH were all failed morning spikes. It happens, but my students and I nailed BLIN and LEDS successful spikes. And this is the main pattern that we're seeing right now for, you know, people with small accounts. Let me be very clear about this. You know, people are like, oh, why are you buying more than you're shorting? Because I'm trading with a small account. And when you're trading with a small account, you know, you want to try and grow it exponentially. My 12,000 is now like 63, 64,000 in 6 months. I've been making, you know, 500, 1,000 a day. Today was another roughly $1,000 profit day for me. Morning spikes offer the best reward, risk reward. If you're wrong, you cut losses. You know, TRCH, I was wrong. It did not spike today. Boo-hoo. It's not the end of the world. I was dip buying it pre-market at 119, and when the market opened, when it still failed, but guess what? I still sold it at 125, 126. So people will say, oh, you know, you were wrong about the morning spike, but where was your entry? So it's okay to have failed morning spikes, as long as you have small losses or small gains. I know a lot of people who were long MRNS overnight or VSR overnight, and it's okay because you're setting yourself up for potential big spikes, like we saw with BGI, not today, well, I guess it's spiking a little bit today, but you know, you got that big spike, and then you got a day 2 spike. So you don't always have to be there you know, right when you see the first spike. If you miss it, it's okay. Usually there's a follow-up spike. So BGI had a great second day spike. What was my play? TRCH did not. And yet it's okay because I was buying it in the 115, 120 range. It got up to the 130s. I'm glad I sold some yesterday late when it couldn't break 135, even though after hours it got up to like 136, 137. Today, it couldn't get back there. 130 was a wall of sellers right at the open, and that's why I sold. And I still had an overall profit. But the key is that you have to take profits. You have to get out when there's a stop, a wall of sellers in place. You know, it's kind of like a stop order. I mean, it's not a literal stop order, but it's like a stop on the spike. Like the spike has just been, you know, put in its place. It is not going to spike. Once TRCH fails to spike here, I mean, it was uptrending all pre-market. I got a good dip buy in here near the lows, and it was uptrending all pre-market long, and it looked like it actually could do it. And it just couldn't. You know, there was a wall of sellers, and guess what? It's okay, and you have to just react. You can't hold and hope. This is the same exact pattern as OESX yesterday. MRNS also, you know, yesterday. Uptrending today, pre-market strong. And it was actually up pre-market. And what happened? Nothing. it failed. So you have to get used to the possibility of failure in these morning spikes. And it's not the end of the world. It doesn't mean that you shouldn't trade them. It doesn't mean that you should hate on them. It's just a reality, you know? There's a lot of short sellers out there, and they like shorting anything, especially when it fails to morning spike. So shorts are going to pound this, just like they pounded MRNS, TRCH. I mean, for me, I don't think it's worth shorting. You know, at best, you're going to make 10, 15 cents a share. And TRCH, you know, I still made 10, 15 cents a share, even though I was wrong. So you choose. Do you want to be a short seller and potentially be right for 10 to 15 cents a share? But if you're wrong, you know, it's going to squeeze you and you'll probably lose 50 cents a share. Or do you want to aim for the morning spike? And if you're wrong, you make or lose 5 or 10 cents a share. Sometimes you make 10 or 15 cents a share. But with the potential to make 50 cents or $1, like BGI, you know, yesterday, where it spiked from the 260s all the way up to the 420s. I know a lot of short sellers who got slammed on this, not just on day 2, but on day 1. Remember, I was buying this for the morning spike on the dip at 122. Now let me talk quickly about when to buy, you know, on the dip. You know, TRCH was my overnight play, but sometimes I like to dip buy near the market open after the stock has already spiked. I don't just dip buy randomly. A lot of people need to study a lot closer, and you make assumptions about my strategy. I'm actually very consistent with my strategy. A lot of you guys just haven't studied enough. And that's sad, you know. I'm not changing patterns here. I'm not changing the game. I'm doing the exact same thing. BGI had already spiked from 54 cents and it got up to $1.40, and I bought it on the dip. I bought it on the dip. Now, this was not a morning spike. The news came out, I think, at like 10:30 a.m. But long story short, it had already spiked up to $1.40, and I was buying it on the dip in the 120s. If I'm wrong, which I could be at on any single trade, what's going to happen? It went down to, you know, 110. This was actually before. I didn't catch the exact bottom. But when you have a dip buy and you have a specific set parameters of risk. I'm buying this at, I think, what did I get it at? Like 122. It had already gone down to like 110 before. So if I'm wrong and the dip doesn't keep going, then guess what? I get out at 110 and I lose 5-10 cents a share. That's okay. And then look at the upside. You know, I had no idea it was going to go to $5 a share. I thought that at best it could go to like 2, maybe 180. So I thought that there would be like 50, 60, maybe 70 cents a share of upside. But if there's 50, 60, 70 cents a share of upside from my buy and 5 to 10 cents of downside, that's good risk reward. Now, as it turned out, there was no risk, and it turns out there was, you know, over like $3.50 a share of reward. So it turned out to be like 350 reward and, you know, 0 risk. So it turned out to be, you know, one of my best buys ever. But you don't know where it's going to be. And if I wasn't busy with OESX yesterday, you know, I most certainly would have. I don't know if I would have dip bought. You know, dip buying on day 2 is kind of rough, but I will dip buy on day 1 of the news. But you can buy the breakout on day 2 at 290. My new DVD called Trader Checklist is really going to make much more sense of this. I can't wait to freaking release it to you probably in the next 2 to 3 weeks. I'm working on that. I'm working on the webinar tonight. But you can buy breakouts, buy dips and buy breakouts, but don't be first. Wait for a spike, wait for news already. So today's example is BLIN. BLIN had already spiked. And mind you, BLIN is a spiker from back here, June 8th. So roughly a month ago, it had a huge spike. I actually shorted this in the mid 2s and covered, and I made, I think, like 20 or 30%, but I had a very small position. Today, it had spiked from the previous close of under $1 a share. It had already gotten to $1.50. Okay? And then it was coming down in here, and you know, really support was 127 here, support was 128 here, support was 127 here, and right where I got it, I actually picked right near the lows. The low was 127. I got it at 128 because I was using this as support. It had already spiked, not just to 150, but near the market open, it had spiked to a buck 48. So I'm buying it again in the 120s. It's just a coincidence that, all these stocks I'm buying are in the 120s and they've already hit like the 140s, 150s. But this is what I like to do. Instead of chasing it right at the market open at 148 or 150, what if it panics, like it did? And then you have to cut losses quickly. So this is why I like to dip buy. And this was on, what was the other one? OPTT was another dip buy I made, I think last week or 2 weeks ago, and it spiked a little. And I sold into the spike and it was nice. But dip buying lessens your risk. As it turned out, again, there was no risk, but you don't know that going in. You don't know if you're going to catch the exact bottom or not. What I did know was that several times it had bounced off support at 127-ish. So I figured, at worst, if let's say it cracks this support at 127 somehow, I'm selling at maybe, 120, 122, and I lose like 5 cents a share. I bought 3,000 shares. So at worst, if some reason it does not morning spike, despite the volume being huge and this being low flow and having a history of spiking recently, at worst case scenario, I'm going to lose like 150 bucks. But best case scenario, what if it not just retests 150, but actually breaks out? So actually there's 3 scenarios. Worst case scenario is, it breaks below support and I get out and I lose 150. Middle scenario is that it comes back to 148, 150-ish and fails to break out. And I still make 20 cents a share, so I make 600. But what if it breaks this 150 and then goes true supernova? Now, I don't know if it's going to go to $5 a share like BGI. BGI is an anomaly, okay? That's an outlier. That does not happen the vast majority of the time. But if it does break 150, it can get to 160, 170, 180, maybe 2. That's when these things can go supernova and you throw out all reason. That is why I think it's the height of stupidity to short these things right at the open. Because even if you're right, and short sellers are right, look at it, it's hitting new lows right now at 114. So if you're right and you short it here at, let's say, like 140-ish, and now you've made 30 cents a share. Okay, that's best case scenario. But what if it went supernova? What if it went to $2 a share and you risk losing 60 cents a share? And if it goes supernova, it happens like that. So you can't even exit your short positions. So congrats to shorts who make this work. But I am not going to do that because of the risk reward, because I know of how many traders trade against me. I have to trade very cautiously. And traders trading against me, I don't mind it. It makes me a better trader. It makes me more conservative. I know a lot of traders were shorting against me here, thinking, oh, Sykes is just pumping it. Well, guess what? It didn't really do much for like 5-6 minutes after I bought. And I was actually kind of nervous that it wasn't going to spike. But then we got a quick spike. And this is what I'm talking about, this quick spike where if you're short, you can't cut losses quickly. So it is a terrible risk-reward scenario to short this anytime near the market open, because in 1 minute, it went from, 138 up to 158. And, shorts, I think we're a little lucky that it stopped at 158. I thought that once it broke 150, it could go to 160, 170, 180. But as it turned out, we got a little fake out breakout. But I still locked in, this was a 20% winner for me. So no different than BGI where I made 20% and I sold way too soon. BLIN, I actually sold near the top in the 150s and I made my 20%. So I'm making 20%, 20%, 20%, sometimes selling too soon, sometimes nailing it, but taking the meat of the move. That is the gist of my strategy. And this is what a lot of short sellers don't really get, is that, the way that my strategy and my teachings have evolved, it's suited for small accounts. This does not work with big positions. I'm not going to buy 50,000 shares here at 127, 128. That's too risky. Because what if it does take out support and I can't get out of a big position? Then I would be in the same exact bad position risk reward wise as short sellers where, if I had a big long position, I wouldn't necessarily be able to cut losses quickly versus the exact same situation that short sellers find themselves in, whether they have a small or big position in. It's tough for them to cut losses quickly if they're wrong. So for me, every single trade is geared towards cutting losses quickly if I'm wrong. That's how I protect my small account. That's how I grow my small account. And it doesn't take much to be right. BLIN had a nice little spike. I did not nail the biggest spiker of the day, which actually is hitting new highs right now, LEDS, but it's okay. I still got 1 out of 2. And remember, look at all these charts, all of these were failed morning spikers. So there were a lot of failed morning spikers, and yet, even if I had them, I would have cut losses quickly. So that is the risk reward. You don't judge a trade just by how well you do, but judge it by, what could have been. Replay the trade in your mind after it's done. Analyze it, say, hey, wait, what was my risk here? And I think that you short sellers out there, a lot of you guys, might want to reanalyze your risk, reassess your risk parameters, because you can get absolutely crushed these days. As you see, every other day or every 2 or 3 days, we have another supernova, which is pretty awesome. This is a buyer's market. So I'm going to continue to be buying these kinds of plays. And I should say also, I missed some shorts, GDEE, which was on my watch list as a blatant pump. This is a perfect first down day on this pump. So those of you who only prefer to short sell, there are plays for you. You just have to focus on short selling pump and dumps. This one was beautiful, and I heard of several students finding shares to short on this one, and then also CTBO was another pump, and this is having a first down day. So there's long plays, there's short plays, and the risk reward shorting a pump and dump is superior. The trouble is finding shares to short, and those of us with small accounts, it's very difficult to find shares to short. So this is why I'm going to focus on buying, these morning spikes. Again, let me just reinforce, it's okay to be wrong on a morning spike. You just have to cut losses quickly. You have to be willing to get out. You cannot hold and hope, which is what too many people do. There's many different ways to screw up in the stock market if you break rules. And it's no different than, if you have a Ferrari or Lamborghini like me, and you're driving 200 miles an hour in a 35 mile an hour zone, and you crash and burn, and you die. And you're like, oh, people say, oh, driving Ferraris or Lamborghinis are so dangerous. No, it's dangerous if you break the rules. If you drive your Ferrari or Lamborghini like 15 miles an hour the way that I do, so that, you can drive so slowly and pose when people are taking pictures, that's literally what I do. I don't drive it very fast. I don't like speed. So for me, you have to look at either driving, that's just one analogy, but driving or trading from a risks perspective first. Always think, what's going to happen if you're wrong? The beautiful thing about shorting pumps like CTBO, even if it didn't have a first red day today, it's probably going to have a red day tomorrow, because this is not sustainable, these 3 green days in a row. If you've seen any of my DVDs, from Penny Stocking Part 2 to Spikeability to How to Make Millions, very rarely will you see stocks be able to hold these 3 big green days, especially after it already has a crash, especially after it already has congestion in here in the mid 3s. And the same thing with GDEE, which is not as exact because it hasn't had a crash yet, and you don't know how many days this is going to go. But you do know as a short seller that these pumps will eventually crash. So there's still pretty good risk reward. And if it doesn't crash it, the SEC might halt these and they'll drop 50, 75% when they reopen. So there is good risk reward shorting pumps. I just don't think that there's good risk reward shorting low flow potential runners, because you can't protect your blind side very easily. You can't get out with small losses or small gains like you can dip buying low float runners. So I know this is confusing. I know a lot of you guys are just beginning, but trust me, it gets easier the more times you see this. And plus, I think I've gotten better as a teacher over the years, because now I see, what it takes for me to not just protect my trades. You see why I have few big losses this year or last year, but my big losses are going down, but also the more plausible trades for people with small accounts. Shorting pumps, obviously it's a bread and butter strategy, but finding shares to short and being there for that crack, it's damn tough. So I'm going to focus continually on trying to find morning spikes. It's not an exact science, but as you can see, just from this week alone, I've nailed 2 or 3 of these morning spikes, and it's amazing. Even if you sell too soon, making 20% inside of an hour. That's really good for small accounts. So I'll see you guys in the chat room. Again, please, please, please sign up for this webinar tonight with me and Tim Grattani. It's going to be amazing. And try to make it, it will be recorded just in case. So, you don't have to feel like, oh my God, I have to change my life around for this. But I think you'll really appreciate it. So I'm looking forward to it. I got to get back to planning it. Thank you very much.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.